A lot of perspectives. I've seen a lot of people talk about it. Different, people in the industry of real estate have said, I think real estate's not going to go down. Some people say, I think there's going to be a huge crash. Some people say, I think there's going to be a correction. So, where do you see real estate going in the near future and then like the next 5 years?
Yeah, I think that's probably more specific to each state. In Florida, we're probably not going to have a big problem, but definitely, I think prices will slow down a little bit, like they have to. The interest rates have gone up from three. Like a borrower in December of last year would have gotten 3%. Now they're getting 5.5.
Yeah,
That's cutting people's buying power. Every percentage point is about 10% of buying power that's cut off.
yeah.
And
Wow, so that's huge. So
that's
if it
huge.
goes up 5%, then essentially somebody that could have bought a $300,000 house last year can only buy a $250,000 house this year, right?
Yeah,
Exactly. So that's huge. So then that means, people are going to be offering less for houses. People are not going to be able to ask as much, and that just drives prices down, right?
yeah, and it hasn't happened yet because real estate always happens a little bit delayed. Just because people that are closing now, they have a rate from 30 days ago, and the rates 30 days ago were much better than now. So as we keep progressing, it'll probably get a little bit, it'll probably slow down a little bit because there's also a lot of buyers now that I'm sure that are shopping that think that they still have a
Yeah.
3% interest rate
Yeah, yeah, yeah.
because they haven't
Yeah,
talked to their loan
yeah,
officer in 6 months.
yeah,
So they think they're getting 3%, and they might come back to the table. The rate might be 6%, and they might not qualify anymore
yeah,
because everyone gets qualified for their maximum potential,
yeah.
which is at 50% debt to income ratio.
Hmm.
So they might not qualify anymore if the rates doubled on them like that, and they don't even know it.
Yeah, yeah. So, you don't think the Fed's gonna? I mean, they're already gonna hike rates a couple more times this year, but you don't think they'll turn track maybe like next year and say, we're gonna find a reason to lower rates back again? Or,
I don't know. What do you think about the gas prices?
I mean, yeah, that's the thing. I feel like the Federal Reserve is in a position right now where they're doomed if they do, doomed if they don't, right? Like right now, we're about to go into a recession. It's looking like we're gonna go into a recession, but what I think the Federal Reserve's the dilemma they have is if we don't hike interest rates, we're not gonna we're not gonna stop inflation, right? So the way that works is if they hike interest rates, the price of money essentially gets more expensive, and that makes prices like that stops inflation, right? When interest rates go up, it'll stop inflation, or it'll kind of like slow it down. If they keep rates low, I mean, if they hike rates, the other problem is, yeah, they'll slow down inflation, but they'll stop growth, right? It's harder for people to get money. It's harder for people to get loans and fund investments or fund businesses or start businesses, and that's the dilemma they're kind of in right now. So I don't know what the solution is going to be, and I'm not. My business is not to predict what the Federal Reserve is going to do either. That doesn't determine whether I invest in something or not at the moment, but I don't
Yeah,
know. It's interesting to see what they're gonna do in the near future.
the inflation is just crazy. I mean,
Yeah,
the government got a helicopter and they had cash and they just threw it down on everyone.
yeah, yeah,
That's
yeah,
basically what
yeah,
happened.
yeah,
And now the poor Fed, everyone's talking shit about the Fed because they're raising rates, but they
yeah,
have
yeah, yeah.
to.
They have to, yeah,
And a lot of people say that they're not going to stop raising until the interest rates meet the inflation rate,
yeah,
which whatever the true inflation rate is.
yeah, yeah.
Because what does the government say the inflation is right now?
I think last time I saw, I mean, don't quote me on this, but I believe it was like seven something percent, and I think it's going up like every quarter.
Do you think that's a true rate of
No,
inflation?
it's definitely not because I mean, I think I forgot exactly how much, but it's definitely more than 30%, close to like 40% of the money supply that we have right now was printed in the last year and a half. So if you really think about it, the way they measure inflation is with the CPI, which is the Consumer Price Index, which is they get a basket of goods and they every single year they measure it and they see the difference in percentage every single year, but they change the basket of goods and what's in the basket of goods every single year, so they can essentially conveniently change it depending on how they want to portray that inflation is right now. So, for example, if this bottle of whiskey was in the basket of goods and it went up 50%, and they take it out and they replace it with another item that went up 10%, inflation is going to be lower, right? But if you really think about it, the money supply is stating, okay, there's 40% more money available this year than there was last year, which essentially means, if you really think about it, that inflation is a lot higher than 7%.
Yeah, definitely. I think they're
Yeah,
manipulating and they're making that number
yeah, yeah.
fake.
And
But
I feel they have for many years too, right?
yeah,
But
yeah, definitely because inflation was flat for a long time.
yeah, yeah, it was. And it was they always had a target of 2%, but it was never there. So, now the excuse is, what, we don't mind letting it run a little higher just to replace all those years that it was less than 2%, which in fact for many years we actually had in my opinion, real negative rates. So essentially, like, let's say you invest in a bond, right, a 10-year treasury or something, and you're getting a 2% back, but there's inflation of 3%, or you're getting 1% back, there's inflation of 2%. Your real return is negative 1%.
Damn,
right?
that's an interesting way to look
Yeah,
at it.
yeah,
I've
yeah.
never looked at it like that.
Yeah,
That's,
like if you think about it, let's say I have $100 and I invest into something that's giving me a 5% return, right? And that means that I get $5 the next year. But now let's say there's an inflation rate of 10%. That means that $5 is actually worth. I mean, I went to 105, but that's actually worth less than that 100 that I had last year, right? It gives me less purchasing power. So there's actually a negative real return.
I see.
So yeah, it's pretty interesting, and we had that for, I feel like, a good amount of years. So I think, you know, I don't think we're gonna go into hyperinflation or anything, but I do think that they're gonna keep on hiking interest rates. If I were to put a guess out there, keep on hiking interest rates, and our economy is gonna have to slow down a little bit. We might go into a recession, but it's not gonna be the worst thing in the world either.
I think everyone could agree that we could use a correction on pricing.
Yeah,
for everything.
100%.
Like not just in real estate, in stocks and in cars and everything, gas. I mean, I hope.
Yeah, cars are out of this world right now. You know, I know a friend that he actually bought a Tesla, and you know how they have like when you buy it, there's a whole waiting period of like 6 months or something. So he bought the Tesla, he waited until he got it, and immediately when he got it, he sold it for $10,000 more than what he got it for.
Holy crap!
So it's because there's a waiting list. You know, it's kind of like a Rolex. When you buy a Rolex, you go to the dealer and you're like, okay, where is it? They're like, oh yeah, it's basically in back order for another 2 years. Yeah. You have to be on a waiting list. So that's why in the secondary market it sells for so much more.
Yeah. Or you just go to that Rolex store and you buy a bunch of diamonds.
And then
you buy everything but a Rolex, and then they'll somehow find that Rolex that you want.
They'll find the Rolex. They'll have it there for you if you're buying a lot more things. Yeah.
Yeah, it's crazy.
So it's interesting, you know.
Yeah.
So